Chapter 15, Building Wealth Through Investments. We're going to start with stock listings and then calculate and distribute dividends. So stock is the distribution of ownership of a corporation. Partial ownership can be purchased in various stock markets. A share is 1 unit of ownership in a corporation. Your face value or par value is the value of 1 share of stock at the time the company first issued stock for sale. The stock certificate is a certificate of ownership of stock issued to the buyer. So there actually are several different stock markets. The most popular one that we hear about all the time on the news is the NASDAQ, but that is not the American stock market is not the only one that's out there. Shares. You can buy several shares in a company, and depending on what kind of company you're looking at when you do a share or how many shares you have, you could actually then be a stakeholder in the company. Dividend is a portion of the profit of a company that is periodically distributed to the stockholders of a company. Credit union. When you are a part of a credit union, you actually become a stockholder, and that's why you receive your monthly dividends. Preferred stock is a type of stock that guarantees a specific dividend to the stockholder. The preferred stockholder does not have voting rights. A common stock is one that gives the stockholder voting rights. So after dividends are paid to the preferred stockholders, the remaining dividends are distributed among common stockholders. The stock market is a structure for buying and selling stock. You want to pay attention to the preferred stock and the common stock. Make sure that you write those down and you know the difference, that the preferred stockholders are paid first, but they have no voting rights. The common stockholders are just given their dividends after the preferred stock, but they do have voting rights. A trade is either the buying or selling of a stock, and a stockbroker is the person who handles the trading of your stock. They receive a commission for these services. You really want to pay attention to all the commissions whenever you or if you decide to dabble in stocks. Stock listings are information about the price of a share of stock and some historical information that is published in newspapers and on the internet. You do want to take a look at the stock listings before you decide to invest in a stock. Your price earning ratio, or your PE, pay attention to that. PE is the ratio of closing price of a share of stock to the annual earnings per share. Table 15.1 shows a stock listing. There are 15 columns across the top of the page which identify specific information for that stock. Your rows list the stock name in alphabetical order. The stock prices are listed in dollars and cents. These are things you want to pay attention to because you will be asked questions about a stock listing. Positive and negative signs show the direction of the stock. So the 0.13 means the stock went up 13 cents over the previous day's price. The negative 0.03 means the stock went down 3 cents from the previous day's price. Now moving on to our stock listing, we look here at the first 3 columns. We have its name, AT&T Inc., its symbol is T, and it opened at $26.24. The next 3 shows the high, the low, and the close per dollar with cents for that day. The net change shows how much this day's closing price per share differs from the previous day's closing price per share. Next is the percent change. So the percent increase or decrease of the day's closing price to the opening price. Next is the volume. That's how many shares were traded on that day. Now remember that the total shares traded means bought and sold. 10 and 11 are the ones that you want to pay attention to before you decide to buy a stock. Look at the high and the low. So the 52-week high was $28.73 and the 52-week low was $23.19. So you're really not getting that big, possibly, of an increase. The dividend shows the dividend paid per share of stock the previous year. So in a regular cash dividend of $1.68 per share was paid last year, so that E denotes an irregular cash dividend. Your yield shows the previous year's dividend as a percent of the current price per share. Your PE, your price ratio. And then lastly, your year-to-date percent change. So to calculate the yield on a stock, we're going to divide the annual dividend per share by the closing price per share, times it by your 100% in order to express it as a percent, and then round to the tenths place. So let's find the current year yield of AT&T stock that reported a dividend of $1.68 and a closing price of $26.28. So take the reported dividend, divide it by your closing price, times by 100%. To get the current yield is 6.4%, which is consistent with the yield from the table. To calculate and distribute dividends, your corporation's board of directors can vote to reinvest any profits into the business or declare a dividend with some or all of the profits. A dividend can be expressed as a percentage of the par value, remember that face value when it first opened, of the shares, or as a dollar amount per share. They are usually declared quarterly. Participating preferred stock is a type of preferred stock that allows stockholders to receive additional dividends if the company does well. Convertible preferred stock is a stock option that allows the stockholder to exchange the stock for a certain number of shares of common stock. Because remember, common stock is when you have voting rights. Cumulative preferred stock that earns dividends every year, and dividends in your arrears. Dividends that were not paid in a previous year and must be paid to cumulative preferred stockholders before dividends can be distributed to other stockholders. Pay attention to your arrears. So how to calculate and distribute dividends? We multiply the number of shares held by the preferred stockholders by the given rate, expressed as dollars per share, subtract those dividends from the available amount of money. Next, we'd have to pay the present year's preferred stockholders and then pay the common stock dividend. So your company has issued 20,000 shares of cumulative preferred stock that will earn dividends at 60 cents per share and 100,000 shares of common stock. Last year, you paid no dividends. This year, $250,000 is available for dividends. What are the dividends to be distributed? So first we have to go back and pay for last year. So last year's dividends, take your $20,000 times the 60 cents to get $12,000 has to be paid to preferred stockholders. We also then have to pay the preferred stockholders $12,000 for this year. The remaining amount is divided among the 100 shares of common stock, yielding a payout of $2.26 per share. So the preferred stockholders are going to get $24,000. The common stockholders will receive the $226,000 among themselves, given how many shares they have. So yes, sometimes it seems like, well, the preferred stockholders get paid first, so they must be getting more money. No. The voters get the money.